Foreign exchange or Forex is a place where currencies are traded around the clock and fortunes can be made or lost in the blink of an eye. Imagine walking into a giant global marketplace, but instead of buying and selling fruits, clothes, or gadgets, people are trading currencies. At its core, the Forex market is where currencies are exchanged. It's essential for international trade and investment. For instance, if a company in the United States wants to import goods from Europe, it might need to exchange its US dollars for euros. This exchange happens in the Forex market. Here's how the Forex market works. The Forex market is like a network that connects the banks, financial institutions, and individual traders, all participating from different parts of the globe. Prices of currencies fluctuate based on supply and demand dynamics, influenced by various factors such as economic indicators, political events, and market sentiment. Currencies are traded in pairs, for example, Euro/US dollar. When you trade a currency pair, you're essentially buying one currency while selling another. If you believe the euro will strengthen against the dollar, you might buy the EUR/USD pair. If the euro rises, you make a profit. If it falls, you're at a loss. The Forex market, where people buy and sell currencies, moves because of different reasons. Think about it like a big shop where everyone is trying to guess which product, in this case, currency, will become more popular. First, there are these reports and numbers about how a country is doing, like how many people have jobs, how much things cost, inflation, how fast the country's economy is growing, and how much people are spending. When these numbers look good or bad, people decide if they want to buy or sell that country's currency. Then, what's happening in the world of politics can make the currency prices go up and down. If a country seems stable, where things are calm and predictable, its currency might go up. But if there's trouble or big changes, like a new leader or fights with other countries, the currency might drop. Also, how people feel about the market can change prices. If traders think a country is doing well, they might want to buy its currency, making it more expensive. If they're worried, they might sell, making it cheaper. To be successful at Forex trading, you need to be disciplined, keep learning, and have a good plan for your trades. The rewards can be big, but you have to be smart and careful. Forex trading is an ongoing journey of learning, with lots of chances to make money if you understand how it works.